Hello, and thank you for joining us for another episode of This Week in AML. I'm John Byrne, Chair of the AMLRS Advisory Board.
And I'm Elliot Berman, our Creative Director. We are excited to welcome you to the This Week in AML podcast,
where we explore key news and developments in the global financial crime prevention community.
Hi, John. How are you this week?
Good, Elliot. How are things going?
Good. The weather's turned more wintry here. We haven't had much snow, but it's gotten quite cold. But that's not unusual for just before Thanksgiving here in Wisconsin. So you're still having sort of that nice glide path fall that you have in Northern Virginia.
Yep. So far, so good. I think it's going to be this way for a few days. So at least through the next 3 or 4, 50 degrees, and can't complain. So, hey, a bunch of things have happened. Obviously, we had the elections in the United States. So there'll be some changes in legislative seats, as they say, coming in 2023. But for our purposes, having done this for many, many years, typically money laundering and related topics, even including what we're going to talk about today, tend to be fairly bipartisan. So I don't really see changes, even though the changes aren't going to be major. The Senate stays the same and the House is only going to be slightly Republican. I don't think it's going to change the focus on digital assets, cryptocurrency, and then obviously, as we've talked about in many, many of our conversations, money laundering sanctions and terrorist financing. But a lot in the past couple of days we thought made sense to mention. And obviously, one of the big things happens to do with what occurred with FTX. So without going through in detail, a couple things that are outcomes of that collapse. One is the House in early December is going to hold a hearing on the Financial Services Committee on the collapse of FTX and broader consequences for the ecosystem of digital assets. And then the Secretary of Treasury, Janet Yellen, just released a statement earlier this afternoon. We're recording this on Wednesday. And she says, I'm quoting, "The recent failure of a major cryptocurrency exchange and the unfortunate impact that has resulted for holders and investors in crypto assets demonstrate the need for more effective oversight of cryptocurrency markets." And she references the President's Working Group on Financial Markets, the Executive Order on Digital Assets, and a study we're going to mention in a moment. But I think all this means is that there's going to be a lot of focus on whether or not current regulations and current oversight are sufficient, given how relatively new this part of the financial industry is. And so based on those two things, the Yellen statement and the announcement by the House, there was also a report released by Treasury earlier this week to the White House Competition Council. And it's got a lengthy title, but assessing the impact of new entrant non-bank firms on competition in consumer finance markets. What was some of the big takeaways in that report?
It's interesting. It was, first, the report's been in the works for the better part of a year. Secondly, as that lengthy title talks about, a lot of the report is about how non-banks and non-bank relationships with traditional banks or insured depository institutions, how that's affecting competition. But there are some, and there are a number of recommendations, which we can talk about in a moment. But I think for me, as a bank regulatory lawyer for many, many years, I think some of the conversation or text in the report about the impact of regulation and the purpose of regulation is an important place to start, particularly in light of both the House Financial Services Committee plan for a hearing and Secretary Yellen's comments. And that is that when you really get down to it, the bank regulatory structure in the United States is about safety and soundness and stability of the financial system, coupled with consumer protection. So we're certainly seeing that many people who were holding their crypto assets at FTX have been hurt, and it's not clear what the result will be for them. The organization's in bankruptcy, so that process will grind away. But which consumer protection regimes might apply isn't clear. And there are many other fintech financial service providers other than exchanges, certainly many of the peer-to-peer payment mechanisms and others like that. There are neobanks that are operating totally online with a broad range of financial services, including taking deposits. But since they're not insured depository institutions, they're doing it under some kind of a shared arrangement with where those deposits are really being held at traditional banks. So I think, coming back to your question, what are the big takeaways? I think one of the takeaways is that Treasury is very interested in figuring out how to balance innovation, competition, and protection. And that is a tough three-legged stool, to be honest, because innovators will generally say, just get out of my way, we can make it better. Competitors will say, I want a fair competitive landscape, but everybody then argues about what fair means. And protection and stability tend to be governors of rapid innovation. So, and they talk about all of that in the report. But again, I think what we saw with FTX, which was something that, very rapid disintegration of a huge pile of assets that now with a lot of people being stuck, that's going to get regulators and legislators saying, well, we have to look at this. Now, there are some people who are big innovation supporters who will say, it'll all work out. Let's see how, give it a chance. They probably didn't have a lot of money tied up at FTX, but we'll have to see. Did you take a look at the recommendations in the report?
Yeah, but I wanted to also highlight the section on risk, because one of the things from our world, they talked about sort of toward the end of the report, reliability and fraud. And they said a few things that I thought were particularly compelling. And they say that issues with that, reliability and fraud, are widely cited concerns with the provision of digital financial services. And they say consumers may not recognize that they're not transacting directly with a depository institution when they use what they're calling a non-bank neobank, which is a relatively new term that I wasn't aware of. and they also mentioned that this sort of goes back to the whole issue of you could access and de-risking, I guess. Additionally, they said that the CFPB has received a number of complaints related to certain of these neobanks, with consumers reporting sudden account closures, unexpected loss of access to their funds, and alleged cases of fraudulent transactions in which consumers report major challenges in seeking remediation. So that's, we have enough fraud going on, obviously. They said one study said nearly 18 million Americans were defrauded through P2P or digital wallets in 2020. So fighting crime, as they mentioned, major expense. The total amount projected of compliance in this report for 2021 was $49.9 billion across financial institutions only in the U.S. So that's also, I think, an area of focus for our community in terms of that. And I think, there's going to be more studies. But it all comes down to what I mentioned earlier, and that is, will there be additional regulation, federal level, state level, both, that sort of thing. And so I think that's pretty important. But on the recommendation side, they talk mainly about how federal banking regulators can use their existing authority to make sure there's competition, make sure there's proper oversight, that are commensurate with the risks, of course, as they're doing with traditional banks. And they had 5 categories of recommendations. Competition, as I mentioned, enabling competition in responsible consumer credit underwriting, effective oversight of bank fintech relationships, competition again with small dollar lending. And one of the areas they spend a lot of time on is secure data sharing. So they talk about privacy and data sharing quite a bit in this study as well.
Yes, and that's an ongoing challenge. And of course, in other parts of the world, UK and Europe, the European Union, where we our company operates, the consumer privacy protections at the country level are substantially higher than they are in the U.S. We have some protections here, and some states, California initially, but more states now following, are enacting stronger data protection and privacy regimes. But it is a growing risk and a growing concern. I think the thing that I scratch my head about just a little bit in reading the Treasury report, their recommendation about, bank regulators using their existing authority, that works to the extent that they're going to modify existing regulations, and even without doing that, change their examination procedures to look at how banks that are partnering with non-banks, how those relationships are being managed, and is there adequate risk assessment and the like. But without probably new legislation or amendments to existing legislation, I'm not sure how far they can truly get to reaching some of the non-banks who at the moment sit outside their regulatory schemes. We know that, for example, they have the regulators, mean in this case FinCEN, has extended a good share of the Bank Secrecy Act regulations to crypto exchanges, coming all the way back to that, through definitions by defining them as MSBs. But I don't know that works up and down the regulatory schemes.
Right. So a lot more to come on this. Elliot, do you want to mention that next week we'll be pulling This Week in AML out of our archives since it's Thanksgiving week?
Yeah. So you and I are going to, last year we set a precedent, and for Thanksgiving, it was the first time we hadn't done a live one. And so we took Thanksgiving week and Christmas week off last year. We're going to do that again this year. We're going to be running an archive edition. It's something that we did earlier in the year on elder financial abuse, which we think is an important topic that should be, stay on everybody's important list. It seems to be more prevalent at this time of the year, and with all of the other activity going on online and things like that. So we'll be doing that, and then we'll be back the week after that, which will be the first Friday in December, with a live event. John, you want to mention the December webinar?
Well, the December webinar, broadly based, is on corruption. We will have a couple of investigative journalists that are, as we speak, working on several projects that they believe will be completed by the time of the December 15th event. So more to come on that, but obviously corruption, a major issue in our community, and they will cover that as good journalists always do, sort of making sure everybody's aware that it's a broad-based problem. I would just say that you'll hear that as you hear this, we'll already have had the November event, Counterterrorism Financing Across the Globe, and what we'll be able to do with you in the future is share excerpts of that going forward. So that's always an important topic for our community as well.
Right. And when you hear this edition on Friday, you will be able to register for the December webinar at our website, amlrightsource.com. John, good to talk to you. We had some technical difficulties, but we finally got to the finish line.
Hopefully we'll fix them going forward. But yes, enjoy the rest of your week. And of course, Thanksgiving, and we will talk soon.
Sounds great. Bye-bye.